This is going to be an incredible session. We are, some of you know that Dreamers and Doers usually has only members-only events. So this is our first ever online event open to the public, co-hosted with public, of course. Dreamers and Doers is a private collective for entrepreneurial women. We provide thought leadership opportunities, authentic connection, and access. And what we're going to do today is we will first kick things off with Katie, who's going to give us an insider's view on the stock market, given that she works for public. And then we'll do a fireside chat with Katie and Ashley and Shang. And we believe so much in the importance of creating your wealth. I myself actually have a background in finance. I was an analyst and investor at a hedge fund for 5 years. And even though I have that background, even I am not always comfortable investing, but I know the importance of doing so. It's scary, but it's so important, especially as I find as women, but for anyone to not miss out on that. So we're so lucky to have this conversation today with our two personal finance influencers and experts, as well as Katie. So I will pass it on to Katie to take it from here. Thank you so much.
Thanks. How's everyone doing out there? Thank you so much for joining. I have a few short slides, and then I really want to get to kind of the meat of the conversation with these two. So let me share my screen. And really in the next 10 minutes, I just kind of want to give an overview of some of the trends we're seeing in investing culture. I think if you've been out in the world this year, you've seen that investing is really having a moment in pop culture. And there's some really interesting things happening that are making this more accessible and more interesting for people to get involved and follow. Real quick, by way of introduction, again, my name is Katie Perry. Obviously, I'm not the singer. If you came to this event for the singer, I'm sorry, I cannot sing. But what I do is I'm the VP of marketing for public.com, and we're a free investing app that makes the stock market social. So it's a way for you to discover new ideas, new people, and navigate the stock market together to build your financial literacy. So as you can see in the screenshots, it's a place where you can actually make investments, but also talk to people, share your thinking around the why you believe in a certain company, and learn by doing in terms of navigating the stock market. And what we kind of provide is a way to invest in what you believe in, and also, again, explore people and ideas. So if this is the UI right here, it really doesn't look like what you might expect. There's a lot of great content in there, places to learn and discover, and really make learning about stock market investing more accessible and more inclusive for more people. And when we talk about democratizing the stock market, a lot of the conversations to date have been around finding ways to give more economic access. So not having commissions on trades was a big step. Then there was something called fractional investing, which came along, which meant that you could buy a slice of a stock for a small amount of money. And that also helped people get more access. But to really democratize the stock market, I think we need to kind of be real with the reality of who's investing in the US. And broaden the investor class. So as you can see here by these numbers, only half of the general population has any position at all in the stock market, whether it's a 401k, a brokerage account, a pension. So when you hear things about the stock market doing well, therefore the economy is doing well, obviously that's not the same thing, because not everyone is seeing that same upside when the market goes up. And then when you look at people of color and women, these groups are under indexing in proportion to the overall number of people investing. And so it isn't just about getting more people investing. It's about broadening who's investing, broadening who has access, and broadening who feels confident investing their money and building their wealth over time. Our community, we're really, really focused on inclusivity. We're 45% people of color, 40% women. We always want those numbers to be higher. But we're really being intentional about wanting to build a community that is reflective of the diversity of the general population, and not just the small group of people who have historically been investing. And when you hear like people say like, oh, I don't know, investing's not for me. I was definitely like that for a while. And I think a big piece of that is when you look at how investors stock market people are portrayed in pop culture, it's pretty much this, historically at least. And so I do think there's sort of a psychological barrier to entry where a lot of people look at these images and either don't see themselves or don't want to be a part of that culture. There's some toxicity around the stock market and investing culture historically that has made people sort of turned off by it and uninterested. And when we look at women in particular, it's funny to me that, you know, all the stockbrokers and all those people in the past slide are all white men. Because the reality is that although women tend to invest less than men, I think about 40% less than men, women are actually super savvy at investing. And this is an article from Bloomberg from a few months ago that found that female-led funds were actually beating men in their portfolios. And so this is not a capability thing, obviously. It's an access thing, and it's about kind of helping people at a younger age understand that this can be for them, and getting more people kind of on that path of financial literacy sooner. And so we really believe at Public that having a diversity of thought around investing and anything really makes us more informed and smart investors. So we have a lot of great people in our community already who are coming from different backgrounds, bringing their lived experiences and navigating the market together. It's not just about following a Jim Cramer type on CNBC and hearing what someone like that has to say. People have unique experiences that can be really helpful as you're learning about companies and industries and trends. So real quickly, I just wanted to kind of level set our discussion for today on a few things we're seeing happening in investing right now, starting with the thing that kind of shook up everything in January, which was the GameStop rush, what happened there. I'm also going to quickly talk about how we're seeing this intersection of investing and pop culture, and then talk about how personal finance is becoming a more public thing. And you see that with creators like the two we have here today, sharing their insights for other people to benefit from via social media. The first thing I want to talk about is there's this big myth that people think that if they're at a certain age, it's too late for them to learn to invest. They feel behind. This is from a study we did last year, and we actually found that a quarter of the people we surveyed turned 30 before they learned the basics of investing. So if you're here and you're kind of in your late 20s or in your 30s and you feel like I'm so behind, I'm left out, you're really not alone. And the reality is this stuff just isn't taught in schools. And many people, depending on, socioeconomic status growing up, don't have access to this through their families. And so, don't feel like you're alone if you feel like I'm just learning. There's a whole lot of people who are in the exact same boat. And so obviously what went on with GameStop, where there was a surge of retail investor interest in one stock, one seemingly random, obscure stock, it brought a whole wave of investors into the market who became interested for the first time because it had completely blew into mainstream culture. So this is a Google search trends chart of a time period, and you can see that around when GameStop became popular, a lot of people were Googling how to invest. And so I think, we'll get into this. Obviously, rushing towards buying one stock because you see it on social media is not something an expert would ever tell you to do. I think the silver lining of what happened here is that for the first time, a lot of people became interested in learning more about how our economic systems work, about how the stock market works. And I think that moment was a good moment for people, even if that was their entry point in, they became curious, they were engaged, and they wanted to learn more. And we've seen this over time where curiosity in business and financial news isn't such a niche thing anymore. You see it with the growth of creators and platforms like Morning Brew. This chart was from about a year ago, which found that finance and business was actually the fastest growing news category above entertainment, sports. And again, this was right at the beginning of the pandemic. So obviously not a lot of sports enthusiasm, but you can see that there's a lot of interest in these topics because these things are interesting if you can get past just the stock talk, if you're talking about businesses and trends and things that impact our day-to-day lives. And so really, I think the goal at public and for people who kind of take a longer term approach to investing is how to kind of evolve from the meme chasing the stocks like GameStop to becoming a more intentional investor. And one of the things that I always hear with people who are just getting started is sort of being confused or conflating the differences between trading stocks at a high frequency and investing in an intentional way in a mid to long-term basis. So if you're kind of a speculative trader, it's short term, you're trying to make money quickly, and the day-to-day level of effort could be quite high because you're really needing to watch those charts because you're trying to time things. And because you're trying to time things, it can generally be a riskier investing style. There's a completely other investing style, which most financial experts would advise, which is a more intentional approach. You want to build wealth over time. You're not trying to make a quick buck. The day-to-day level of effort could be much lower because if you're looking at the long term, you're not worried about what the chart's doing in the middle of a day. You're looking 5, 10 plus years out. And so you're just hoping for an upward trajectory over time. And this is generally a safer approach. This is not investment advice. So, but this is kind of generally how to think about it. Not all investors are the same. Not all investing is the same. And there's different types of profiles. And how you decide to invest is completely up to you. I think at the end of the day, it's about educating yourself, knowing your financial capabilities, knowing your risk tolerance. But for most people, kind of being on that right side is ideal. Another trend we're seeing is that things that are happening in the markets are cultural moments. So this year we saw Whitney Wolfe Herd become the youngest female to take a company public. And that was a great moment. There needs to be more of that, in my opinion, but a big moment where there was a lot of people interested. Either they'd used the app, they'd followed her journey, and they were interested in the IPO. There's also been a lot of flurry around something that's called SPACs. SPACs are companies that are created to buy another company and take them public. And the reason these got so much attention is because you had a lot of celebrities and prominent business people involved in them. So they had that awareness around them where people were kind of looking to learn more about what a SPAC is. And then also we're seeing a lot of interest in what's known as a thematic ETF. An ETF is just a basket of stocks that you can buy together, and people curate these and make it possible for an investor to buy into a certain trend in the market versus trying to pick one winner. So one of the more kind of talked about fund managers is Cathie Wood, shown here. She runs the ARK portfolio of ETFs. She has innovation ETFs, there's biotech ETFs, but these are things that people are interested in because they can invest in trends they believe in, whether it's clean energy, electric vehicles, and they can do so without having to pick one stock that they think will be a winner. So real quick on public, one thing we're really big on is creating guardrails around the investing experience because 90% of our members are new to the market. And so while we don't want to tell anyone what to do or how to invest their money, we think it's important that given all the attention around the stock market, that there are educational opportunities in the app so you can make an informed decision even if you're a beginner. So one thing we do is put safety labels on potentially risky stocks. So here's GameStop. It's a volatile stock. So we just want to make sure people understand that. Maybe they saw their favorite influencer post about it. If they come in through our app, we kind of want to be that experience where they get more education before they make a decision for themselves. We also have a social feed where people are sharing content, not just on stock charts. I think you see that in a lot of trading communities. It's not very accessible for most people. I personally think it's boring. I'm a long-term investor. I'm really interested in entrepreneurs and trends I care about and companies with values I believe in. I really don't care to talk about stock charts. If that's your thing, that's totally cool for most people. We want to talk about bigger topics. So that's the kind of conversation you see in our community, and you can still kind of get that education without getting so deep into the technical charts. And then we also have things like this feature, which is Road to IPO. It kind of gives you the behind the music of companies that have recently gone public. What did their journey look like? Did they have speed bumps along the way? and help you kind of just get more context around some of these companies and learn more. And really kind of the tone of the conversations is all about accessibility. You see people sharing thoughtful commentary, but as you can see, this doesn't read like a script you'd see on business news. It's accessible. It's like if you were at brunch with your friend sharing ideas. It's not about influencing people. It's about talking about things you believe in and learning from other people along the way. And so when making personal finance not personal is about kind of getting this all in the open, because talking about these topics just like we're doing today is so important for learning. I read a study that, you know, women are less likely to talk about their finances with their friends. And if you think about sort of the opportunity cost of that, not sharing ideas, you know, not learning from each other because it just doesn't come up, I think that's a big missed opportunity. So you're seeing that among members in the app. We also just launched this feature that where it's an AMA style feature. We get executives on the platform and you can ask them questions. What's interesting about this is usually investors only kind of ask questions of these executives on earnings calls. If you've listened to an earnings calls, they're usually very deep into the financials that they're reporting, which are super important to kind of understand as an investor. But retail investors care about more things. We had people asking Lemonade's COO last week about his hiring strategy. If he would ever, you know, put Bitcoin or crypto on the balance sheet, like questions that would just never come up in an earnings call that retail investors care about. So it's really all about using social to give more access and educational opportunity. And I think at a high level, when we think like big picture of the stock market, you can see over time it goes up and down, but like year over year over the years it has an upward trend. But in those moments of the ebbs and flows, I think most people don't necessarily want to be alone with their charts and numbers. They want to be here at an event like this or talking to their friends and navigating and learning together. And so I think that's one of the big trends we're seeing, where these things are in the open and people are really enjoying talking about them with their friends and their networks. I know we're going to share a link in there, but if you want to join our community, we have these awesome hats. All you got to do is sign up, or if you're already in there, just DM me. I'm at KDP. I will send you one of these hats. We have plenty, so whoever wants one can get one. And with that, I would love to dive into the fireside chat. So let me stop my share.
Thank you so much. This was phenomenal. And I love my Invest hat. I wear it all the time. It's super cool. So you should definitely take Katie up on that offer. I'm so excited for the fireside chat. Ashley has one too, with Ashley and Shang. And I follow both of them on Instagram. They have phenomenal content. So I'll drop that into the chat as well so that you can follow along on their journey. So very, very practical and actionable. So I'll let you take it from here, Katie.
Great, thanks. Yeah, let's dive right in. I think let's start with some introductions just so everyone here can get to know you, although I'm sure they're already following you because I follow both of you and you have a lot of followers. But Shang, do you want to go first? Just give a quick background, who you are, where to follow you, a little bit about you.
Thank you. Hi, I'm Shang Saavedra. I'm a blogger at Save My Cents. So that's one word on Instagram. And I'm here to inspire all of you to learn how to invest for a retirement. And I reached the ability to retire by the age of 31. So that was 5 years ago. And that when I reached that, I was so inspired to share about it, but I didn't know where. So I just kind of told a couple of friends, and people were like, what the heck? Like, you need to write more about this. And I decided to start blogging. Then I shared it to Instagram, and that's how the story started exploding. And for me, it's really a passion project. So I actually still work part-time. I'm a part-time worker now because I get bored. But it's really my passion to make it fun and also positive and joyful to talk about saving money and investing money and getting people to do it scared. My hashtag is do it scared. You don't need to have it perfect to get started.
I love that. That's great advice. Ashley, how about you? Tell us a little bit how you got into personal finance and being a creator in this space. What did that journey look like?
Yeah, so happy to share. Thank you for having me. I founded a company called the Fiscal Femme. It is a feminist money platform getting women and allies wealthy. And how it got started, it was pretty haphazard, actually. I needed it myself. I related to what Geshe was saying earlier about working in finance. I worked in finance, I studied finance, and I still knew nothing about my own money. And I thought, if I don't know anything about money and I have all this finance background, like who actually knows about this? And it turns out no one. And a lot of people felt the same way I did. So I started sharing what I was learning also, like Shang, on a blog called the Fiscal Femme at the time. And that was back in 2011. So that's really where it was born. And it's been really cool to see how the personal finance space has evolved, because now there are companies like Public. We have so many more diverse experts and voices in the space. But when I first started on my money journey, it was like very white, very male. There was a lot of shame and judgment in this, in financial education and advice. So I'm very excited about the trend we're seeing in the space.
Yeah. I want to kick off with, I love this topic personally, because I think it's so interesting of like how money is so personal and so different for everybody. And I went to this seminar right before kind of the world shut down. I remember there was somebody there and she had us write down, what's the one word you associate with money? And the answers were some were control, some were freedom, power. And like, it was so different for everybody. It was really interesting to dive into that. So I'm curious, Shang, I'll start with you. How is your personal relationship with money, and how has that evolved over time? And does it have to be scary if you are someone who's gets a trepidation around the thought of managing finances?
Yeah, there's a phrase that I often tell the people that I coach, which is money is like a knife. If you use it well, it will feed you. If you don't use it well, it can kill you. I hope it doesn't kill everybody. But that just speaks to the fact that I see money more as a tool, that it can build and bring great things like financial freedom. Like I'm part-time so that I can be with my child. And that's from having grown money in my life. And part of the reason why I promote the hashtag Do It Scared is because I don't believe that you ever can completely get rid of fear in anything. I mean, think about all the crazy decisions we make in our lives, like changing jobs, taking on new relationships, having a child, very, very irreversible decision. And the Do It Scared model encourages us to never feel like we have to have it all together. I still don't. I've made mistakes. And I think that this allows us to give ourselves grace and forgiveness so that we don't keep pounding on our past mistakes and regrets, which prevents us from making future decisions that can be really great.
I love saying money is a tool. I think that's like a mindset shift that could be huge for people. I'm wondering if you have any advice for people who do feel that emotional like pit in their stomach about money. How can you kind of remove the emotion and really see it as a tool?
Try not to think too far ahead. I would say just take one tiny little step. It feels like you're jumping off a cliff, but just take that one tiny step, get comfortable with that, and then take further steps. You don't have to figure out the next 5, 10, 20. I know I talk about retirement, which is many decades away for a lot of people, but it starts with a tiny little step, like signing up for Public, for example. So that can be your next step.
Small habits. Love it. Ashley, how about you? Has your personal relationship with money kind of evolved over time?
Definitely. It's evolved a lot. I relate a lot to what Shang shared. I'd say the biggest evolution has been 2 mindset shifts for me. The first is I guess originally when I started on my money journey, I never wanted to look at my money. I felt like having a plan would be very restrictive. It would be taking away from the fun in my life. And when I actually started getting into it and creating the plan and living it, I realized it was actually the opposite. I'm giving myself what I want most. So the reframe was that dealing with my money is this act of self-love instead of this thing that's taking away from my life. And so that was a big shift because it makes you look forward to it. And you can, again, use, like Shang said, as a tool to have and experience what you want. The other big shift for me was the growth mindset, because I think I agree, like I still make mistakes. I'm still learning. So much about the industry is changing. And we have this tendency, and I had this tendency to think that how I was with money was just how I was. Like, I'm just bad with money, or I don't know anything. But it's just like any other skill or learning a language, or like we can improve and grow over time. And so I think that mindset allows us to have that compassion, grace, make mistakes, come back from them, and realize like they're not these condemning things that, oh, there I go again, I'm just horrible at this. No, it allows us to think more like a detective, like what went wrong there? What can I do better? And then we can get better and grow in our money lives.
Yeah, I love that. I think it's like important not to be too hard on ourselves, because when I think about this entire industry, it's like over time, it's been purposely meant to feel like intimidating. Certain jargon, certain words, like cultural cues that like cut people out on purpose. And it's not that, you weren't paying attention in class, because it wasn't in class. And I do agree with you. I think people fear what they don't understand. And so it's getting over that hurdle. And then once you start kind of learning, you that fear would seem to kind of fall away. So I can definitely relate to both of your experiences. I think one thing that's interesting is I think we definitely don't want to harp on mistakes, but I think one way people learn is through either their own mistakes or other people's. So I'm wondering, like, what are the big things you see generally of like personal finance, investing, any of that? What are people doing wrong? That's like a quick either mindset shift to fix, or ways we can kind of help other people avoid those mistakes. Shang, I'll let you go first.
Great question. And I see this a lot. I would say the one thing that I tend to see a lot of people do is that they want to, and this is talking about people with debt, because I reckon that there's a lot of people with debt who are watching this, is that they try to address debt by taking on another form of debt. And that is just a continuing snowball that's going to cave yourself in. And so it really requires a huge mindset shift, as well as doing something different to get out of debt, because debt is super, super tricky. And so one of the key ways that I coach people is when I ask about the debt and I ask about what they've done to address it, I really pay attention to people who said, oh, I'm going to try to just figure this out by taking out that personal loan or cashing out my 401k. That's when I realized that the mindset shift hasn't quite happened.
Yeah. Ashley, what about you? Any big mistakes that you think people here could learn from?
I think the one I see most often is like this, not looking back to that with like thinking we have to take these monumental steps or like drastically change our lives in order to make progress. And like Shang said it too, like taking these small steps, tackling something in 5 minutes, or learning about something, like coming to a class like this to learn something, rather than not looking at it, which can feel like kinder to ourselves in the moment maybe, but it feels so much better to look at it. Another like mistake I think that I see too is comparing ourselves to others. And something I'm really passionate about talking about is privilege and money. Like, as I share like why personal finance is important to me and what it's allowed me in my journey, like I'm speaking as a white woman who had college paid for and had support from parents. And so I think it's really important to acknowledge that we're not starting from the same place, maybe different universes completely. We're not encountering the same barriers. So to not like punish ourselves by looking at somebody else and thinking, why haven't I done that? Why haven't I gotten there? Because like these conversations are really important in how we can level up personally, but we have to understand that there are really big huge systemic injustices and inequities too.
Yeah, completely agree with that. And then when we talk about, differences in groups of people, how they approach this stuff, I think there's a lot of conversations around men and non-men and how those differences are there. I showed the example of the fund managers just because I think there was in the 70s, women couldn't even open a bank account, if I'm not mistaken, by themselves. So there's certain systemic things that put people behind. It doesn't mean that group or that population isn't fully capable. And I've read studies about the differences in investing habits between men and women. And I think, men tend to take a little more risk. They tend to be a little more short-term, whereas women are not. And that tends to pay off if you're kind of in the long-term mindset. So I'm curious, like, just differences of how you see like men and non-men approaching wealth building, and what is good about those differences, what is bad, like what are you seeing? Shang, I'll let you dive in first.
Two things I've noticed. One, men are more likely than women to believe that investing is for them, that they have a role as an investor. Number two, which this is a fun thing I like to say to build on Katie, your point that women are better investors. I actually say men are the more emotional investors of the two genders because they're more short term. They chase the highs and they also get the lows, more volatile than women. Number one is where I care more, because let's forget it. We're already the better investors. I love that. Let's celebrate it. That's what we're for. But if we don't even believe that women should be investing, because for decades, the financial institutions of the world used men in their marketing, and they market and believe that men control the money. If anyone watching this is a stay-at-home mom or the spouse who's not bringing in the income, you too still can invest. Just because you're not the one bringing in the money doesn't mean that you don't have ability and agency over your household's income, wealth, net worth, etc. And I love this hashtag that actually a few friends of mine started on Instagram called hashtag I look like an investor, all one word. It features women of all kinds investing because we want to normalize the idea that you are an investor and that you have a right, a seat at the table to take on wealth building for your family.
Yeah, I think the representation piece is huge. I mean, I think even the advertisements have only recently started to change, and not even all the time. And I think that we do downplay the impact of just continuously seeing images that don't relate to us, whether we're a person of color or a woman, and then like just expect one day we're an adult to see ourselves there. It's you can't ignore like the impact of that over time. So I completely agree. Ashley, what do you think differences wise? Anything to build on Shang's point there?
Yeah, so I thought of earlier you shared about the word association, and I've done that exercise in workshops before, like what comes to mind when you hear the word investor, just to build on this representation. And it's like a Warren Buffett, an old white man, same with billionaire and millionaire. And so we have these types of associations with wealth and investing. I love that you shared earlier the stat around women being better investors. And in my experience, so I don't have a study behind it, but just in working with a lot of women around investing, something I found is like there's not inherently less knowledge or less skill around investing to begin, but there's often a wanting to understand investing more before getting started. And that's probably smart, but what happens is that the person, and I think like how Shang put it makes so much sense, like who investing is for, right? If you feel like it's for you, you're going to get started, and we learn by doing. And so by being in it and interacting and trading, they're learning. And so then there's this built up intellectual capital there that if we don't get started, we're not getting. So I'd say like the difference I see is wanting to understand it and know what's happening with our money more before getting started.
Yeah, I think it's like it keeps you on the sideline if you don't have that just innate confidence. And then men get the advantage because they just have that confidence, and then they're in there and they're learning and they're exploring and they get that head start. So that's a good point.
And they're doing plenty of stupid things like your research shows.
Yeah. But I do think that's true. I think not a sweeping generalization, but like women do like to know, their studies want to know they're ready to do something before getting, which I agree, it's not a bad thing when it comes to your money. We just don't want to be too timid to even get started. So for people who are kind of new on their wealth creation journey, what are some like tangible tips or advice for like getting started? And then maybe someone who's not right at the beginning, but trying to up level, like what are some pointers? Ashley, I'll let you go first this time.
Yeah. So for those who are getting started, I recommend a few things before putting a lot of money towards your investment. So building a rainy day fund, which we saw was really, really important always, but even more so during the pandemic. Paying off high interest debt, any short-term money you need, not investing that, but for money that you have set aside for the long term, like for me, that's like 5+ years, you can start meaningfully investing. And that doesn't mean that you can't invest at all until you have those boxes checked. So just like you'd buy a course or would buy a ticket to a concert or something, you can set aside money to actually learn how to invest, or like with the $10 from Public, for example. So that having those boxes checked for me just means not putting aside something I'd put towards my debt payment into investing. But what's great about getting started with a small amount of money and practicing and learning is that when you are ready to start meaningfully invest, you know what you're doing and you feel confident, and there's this comfort level with putting your money towards investments. So I think getting started, investing money to learn, there's so much to this learning by doing. So if you do sign up for Public, I'm in the app. I'm like, I have to brag a little bit. I'm trending on Public today. My recent post.
Check that out.
So basically I shared, I'm having a lot of fun in it, I have to say. So I shared that there's a few brands that are coming out with this mushroom leather. And so I'm really excited to see what happens with it. So I'm following Lululemon to see like what happens, because you can't actually purchase any of the products yet. But anyway, so being in there, there's like education that you can do. I post in there. Getting to know the jargon, I think, is really important when you get started, because unfortunately, the jargon's a jargon. It's meant to keep us out, but to be part of it, we have to learn it and get comfortable with it. And the more we hear it, the easier it will feel. As far as leveling up, I am a long-term investor in low-fee index funds and ETFs. And something that I've been like leveling up and honing in on is investing with my values. So for me, that can mean investing in companies that have women leaders, or funds that exclude companies that don't have women leaders and board members, funds that exclude companies that have labor violations, or invest or have fossil fuel businesses. So it's been really, and it's definitely, I'm not perfect. What's another cool thing in Public is when I invested in recently in a fund called She, which is it's indexed on a gender diversity index. And I got suggestions of other funds to look at from people in the community because of that. So so taking on this invest with your values and has been my way of leveling up and making sure that my money is aligned with what's most important to me.
Yeah, I think there's a big myth that to even get started, you need like a lot to put in. And sometimes it is, like in high school, I remember I took economics class. The one day we ever went over this stuff, we were doing like a stock market kind of simulation. And then it kind of all just clicked because I wasn't putting money in, but we were like going through the motions, and it was like learning a language where I studied the terms, I did fine on the quiz. And then when you go to like visit another country, you realize there's a different like fluency by being there. And you don't have to stick your neck way out. You don't have to like take money out of a 401k and put it in one stock. Like you could literally put a little bit into one index fund. Again, I'm not telling anyone advice, but like it doesn't need to be this like black or white extreme thing. And sometimes you can get that hands-on experience without putting too much skin in the game to start. Shang, what do you think for someone, the beginners tips and also the level up group who's trying to get to that next level? What do you think?
Yeah. If you're just beginning, I would say just make sure you got that emergency fund. I typically recommend anywhere between 3 to 6 months of expenses, depending on the situation of your family. And like Ashley said, you're investing and learning, but you got to start as soon as you can, because the only thing we cannot reverse is time. Time in the market is better than timing the market. Time in the market gives you flexibility to reverse mistakes, but you got to start now, because you cannot reverse time. The only advantage anyone ever has in investing is youth. It is better to start younger. That being said, also when you first start, what are you watching us on right now? You got a supercomputer, either your phone or your computer. You got access to all the information the world ever has to offer through Google. And so I encourage you, any word you don't understand, Google it. You don't understand this term, Google it. What did we just mention in the slide before this? Google it. There's an article out there that's going to explain it to you. I also love the website. I'm going to type this out. Investopedia, great website that just breaks down investing terms. This website saved my life in my first few years of working, because I work on behalf of private. I didn't understand half the things they said. So yeah, this website got me through my job. For medium range investors, I would say after a few years, I learned how to read in a statement. I learned that I owed taxes when I sold appreciated stock. I focus on being tax efficient. So I'm a millionaire now. I'm subject to increases in taxes because the government likes to tax the rich. I believe in paying my fair share, but I don't believe in tipping extra on my taxes. So when you get to the more longer term investing, you got to get smart on things where there are accounts that save you on taxes first, like work sponsored retirement accounts like 401ks, 403b, 457b, IRAs save on taxes. There are other ways to save on taxes. And that, being smart about that, could save you up to 40% of your wealth over your lifetime. If you're not smart about your taxes, you could actually be giving up a lot of tips to the government. And so that's where I push a lot is once you get into investing, you're comfortable with the volatility investing, but you're in there for the long term, you're hanging on, then let's get smart about keeping as much of your money as possible.
I love that you referenced the supercomputers we have, because there's so much great information. And this came up on another panel I was doing the other week, and I thought it was a great point. So I'm gonna reiterate it. Be careful of articles that are plugging one stock or seeming to be very biased to get clicks. Investopedia is great, general education, understanding concepts. If you're looking through articles on this type of thing, you'll also come across things that are just trying to get clicks. Here are 3 hot stocks to buy in May. That's not the kind of stuff, at least, that's not the kind of stuff that if you're a beginner, you really should be putting all of your stock, for lack of a better word, into. It's the general education, but just watch out for that, because just like all other media, there's great content, and then there's content that's not so great. And so kind of navigating that is important too, as you learn and dig into this stuff yourself. Okay, so we'll keep going with the actionable tips. Would love to talk about something actionable or a few things that you all recommend that everyone could be doing to either improve their financial literacy or wealth, or create their wealth. Things that are right within grasp now. Shang, do you want to take on that one first?
Yeah. So neither of us can give you investing advice. Neither Ashley nor I are licensed financial advisors. And also because I still do, I do work on behalf of investors at my main hustle. That's part of the reason why I don't appear on any platforms to even talk about investing, because that's against my work policy. That being said, there is one piece of advice I would give to anyone thinking about, well, how do I figure out where to invest? A great place to start, and this was taught to me by Janet Hansen basically, she was the predecessor to Sally Krawcheck, a fantastic woman in the financial space. Invest in what you love. This is one thing that I think women in particular are superb at doing. we are great at researching stuff we love about. I mean, if I ever ask like any of my girlfriends, what should I be buying for my toddler child at this stage? Oh my gosh, I get the greatest recommendations. And I think that's because women do have this great passion for going really deep, maybe a little bit too deep sometimes on TikTok, into stuff that we love to learn about. And I would love to see people apply that same passion about learning about all of the random things that you love into investing. And you can start. One great thing is, what are companies you think are just really great? What are companies whose products you would buy and you think that you see other people buying over and over again? Those companies are likely generating profits, are likely great buys if you are the individual stock type of investor. I'm more of a low cost index fund because I don't really want to think about my investing. And also I do see a lot of proprietary info in my work, so I can't really be doing trading anyway. But a lifetime love of learning and investing in what you love, investing with your values, I think is a really, really good way to continue building your wealth.
Love that. That's great. Ashley, what do you think? Not advice. I love how we keep reiterating that.
I know. I don't think I've said that enough, actually.
No, it's good though, because a lot of times, it's important that it's general education. Like, I feel like new people, kind of the first place they always go sometimes, and it's totally reasonable, is to say, I'm ready to invest. What should I buy? And it's so different for everybody. Like, it's what I am passionate about, what I believe in is different than probably both the two of you and for other people. And so there is no one answer. And so I think a lot of times, if unless they're your financial advisor, if someone's giving you one answer, kind of think a little bit about it, because that might be right for them, but not you. But Ashley, I'll let you dive in with your non-advice tips on kind of just tangible things people could be doing.
Yeah. And to that point, like, there, not only is it what you should be investing in, it's like knowing your whole financial picture. Like, what are your goals? What are you already working on? What other things need to get done? So there's so many, that's what's so hard about, I'm sure it will come up in the Q&A too. Like, we have such specific questions, but personal finance is so personal. So hopefully you'll still be satisfied by the answers. The thing we can do, so we're all working towards different goals. And I think one of the most powerful things I've seen in my own life and with people I work with is paying ourselves first, whether that means having automated payments going to our debt or to our rainy day or to our investment account, wherever we are in our goals, makes it so that it actually happens. And I definitely was guilty of that. And at first it was happening in my personal life, and then it was happening in paying myself in my business. Is when we wait till the end of the month to see what's left over to invest or save or put towards debt, there's just not money left over. And I've seen there are a few unicorns out there who are able to just have their accounts be growing without getting the money out of the account. But for most of us, something happens where we make conscious or subconscious decisions and the money just kind of gets taken up. So whatever your goal is, even if you're living paycheck to paycheck right now and you're like, Ashley, there's no way I'm putting anything extra towards my goals, you can start with as little as $5 and just see what happens. And what usually happens is we notice that we didn't miss it too much. And that's kind of a cool thing. Some of the apps that steal from you can kind of open your eyes to that, because we think there's not money left and then somehow it works out. And so you can set that up and then set a calendar reminder for a few weeks and check, did I miss it? Is this something I can increase now? So I find that's a strategy that can help first, like, open our mind to the fact that there could be some room there that we don't know about. And then also start making progress. And when we talk about, we've talked a lot in little denominations of money. And when we're talking about things like retirement or buying a home, like, these little increments can feel really like we're not making any progress. But remember, I think it's really helpful to remember that our progress isn't linear. It's not like, oh, I'm doing $5 a month now, and then that was going to take me this many years. It tends to be exponential, because it starts to feel really good. Now I'm a saver. Now I'm an investor. Now I'm debt free. And we start to make more changes and make different decisions. So it really can be exponential. Especially when we're feeling really far from a goal, to not think too much about the end goal and more about the steps we're taking right now.
Love that. Love the idea of it's like paying your future self. It's not taking money out of, it's like taking money from now. It's paying your future self. So it's a great way to think about it. I can't believe we're almost to 5. I'm going to scan for a few questions. If anyone has any last minute, drop them in. I see some like kind of specific questions about public. For those, you guys can just email me, Katie@public, and we can sidebar on those. But I see one here from Rena that's interesting that I think gets at something that's probably common with this group, is that it looks like she's building a business, obviously super busy, working a lot of hours and trying to manage and wrap her mind around the time that it takes to kind of take these steps and how to balance that with running a business. Any advice for kind of navigating that, or how to think through the time commitment? Either of you.
Yeah, so I think, again, like chunking it down into like, what 5-minute thing can you do today? And I think it can, and something that Shang mentioned earlier, like it does, and it was also in Katie's presentation, like looking at individual companies and evaluating takes more time, but to do the research and invest in a fund and then set up automatic investing, that's like a one-time thing. And then you just check on it once a quarter or something. So I think for someone who's strapped on time, like a fund investing strategy probably will save you a lot of time. Again, not advice, but in being able to get started, but not feeling so bottlenecked by all the research.
Yeah, I think both Ashley and I promote something really similar. I love setting aside 1 hour a week to focus on finances. I've called it either the sexy money date or money happy hour. And I think Ashley have a very similar term for it too. It's you don't need a lot of time. And Rena, I think you're building a business. Building a business is also a huge investment. Investing isn't just stocks. There's plenty of people out there who make money from being owners of landlord, they own real estate, or people invest in a bunch of whole other things. It's not just stocks. I know stocks is here, but I would say put a little bit of time towards it and do what you can. Part of the reason why I'm not a landlord is because I just don't have the time and capabilities to do that. And I don't beat myself up for not being in that class of investments, right? Like index funds for me make a lot of sense because I also don't have a lot of time.
Love it. I see one here. Any books you swear by? Assuming about getting started in personal finance.
Three books, and I'll try to type them into the chat if I can. There's a 3-book sequence that I really love, specific to investing. Ashley has a fantastic book about money mindset in general that I also recommend. Broke Millennial Takes on Investing. That's the beginner's guide to investing. Start with that. Then The Simple Path to Wealth. Then if you want to get pretty advanced, The Boglehead's Guide to Investing. So I'll write it down in the chat.
I second. I love Erin's book. The other one that was one that I read early in my like money journey was I Will Teach You to Be Rich by Ramit Sethi. That was also good.
Yeah, I hear those a lot. Definitely get Ashley's book too. That's awesome.
30-Day Money Cleanse, yes, for money mindset
in the chat. Lots of great books to read. Okay, this one's from Sarah. Is it, and I assume we can't give you specific advice, so we'll speak in generalizations. Sarah's wondering what I think a lot of people wonder is kind of the cadence of where they're putting investing. And so she's wondering, is it better to max out your 401k before putting money in a brokerage account outside of that? How to think about that. And I think you probably say it depends on the person, so we'll speak generally.
Yeah, I covered this a ton. I have a course literally that teaches people how to demystify 401ks, IRAs, and things like that, and the pros and cons. Or a reminder that the 401ks and IRAs are designed for retirement. So you have to remember the money you put in there, you're not going to see for a really long time. So make sure that that's meeting your goals. You can absolutely invest outside. You also don't have to max it out. The only reason why I like 401ks a lot for people to start is because it is automated. And I just love the fact it's automated and I never have to think about it.
Yeah, so echo all of what Shang said. The other thing with 401ks, so definitely matters when you plan to use the money, because if it's not for when you're 59 or older, then There's penalties, you pay taxes when you take money out, but it's tax advantage. So when we're thinking about like, if it's all for a long term, then money in a 401k grows without having to pay taxes on the growth. So depending on if it's traditional or Roth, but you're getting tax benefits on one side. So it's a really great way to start investing. And also what I think is very accessible, should never use accessible in 401ks because it's definitely not, but they usually have a limited number of options, which for a lot of us, like getting started to research 15 funds feels a lot easier than having the entire market available. So it's a great way to get started, get comfortable. It comes right out of your paycheck. So those are, some benefits of it. Same with the IRA too. I'm using them interchangeably. They both have the same tax benefits.
Yeah, I'm seeing a lot of meaty questions about retirement. So I'm wondering if they should sign up for Shang's class, and she just shared the link there. But it sounds like those might be tough to get to in a minute, but I think they're all great questions, and sounds like there's some resources there. With that, I think we're at time. I'm so sad. This was so much fun. I learned so much from both of you, and thank you everyone for spending time with us. I think you're all taking the right first step, and it was lovely to meet everyone virtually. Hopefully we can do this in real life soon.
Thank you so much, everyone. And I obviously have to show off my public invest hat.
Yes.
A reminder that if you get the app, you can message Katie. It's Katie and a P to get your hat. And for any other public specific questions, she offered you to reach out. Thank you so much. This was phenomenal. Thank you for everyone for tuning in and for investing in yourself by tuning in. And don't forget to follow Shang and Ashley for amazing additional advice, and Katie as well on public. Thank you so much. Have a wonderful
Thank you, everyone.
Thank you.
Thank you. Bye.
Thank you.